right, everybody, welcome back to my channel. For those of you who are new, we do financial education videos on Saturdays and portfolio reviews like this on Wednesdays. These portfolio reviews are, educational, but I also do this for me. So one of the biggest reasons why I created these specific videos on Wednesdays is just to go through my portfolio, take a look at my holdings, and really kind of document my journey of investing from beginning to where I am now. So on these videos, if I'm buying new holdings or selling holdings or anything like that, I'm going to kind of walk through where I'm at, how I'm performing, and then what we're actually buying and selling. And for those of you who have been watching a couple of these portfolio reviews, what the heck, we're down to 21,000. I just made a video a week or two ago where we cracked 28,000. But if you remember, one of the holdings that I had here, this VUG, and if I click on this, obviously market was down today and has been kind of dropping a little bit. But you can see my market value here is a little under $900. I actually started putting money in there all the way back in, let me think once, I think September 1st is when we actually started putting money into this fund, and we did it as a way to save up for our hot tub. We got a hot tub. It just delivered here like a week or two ago. We put the money in here and kind of used this fund as a savings account. We got it up to about $6,000, which is what we needed to pay for the hot tub. And when it was all said and done, we took the money out to make the payment, and we were actually left with a profit of almost $900. So taking that money out to pay for the hot tub is really what has dropped our portfolio total. And with that, something I wanted to share this week, kind of one of my first knocks on Robinhood. Still use the app, like it a lot. I'm not going anywhere. But as you can see here, I'll put up on the screen, when I tried to take the funds out to pay for my hot tub, Robinhood actually blocked the transaction. So something that I had to learn that was kind of new. I was a little bit frustrated when it happened, but I actually have a savings account linked to Robinhood and a checking account. And because I deposited funds into that VUG using both accounts, as you can see here, even after you sell the shares and the funds settle, you need to let the funds sit for an additional 60 days before you take them out. So I've got friends that also use Robinhood who haven't used this issue, all because they use one bank account. So I guess what I'm letting you guys know, something I didn't know going into this, is if you're going to be putting money in or taking it out, I really recommend you only use one bank account and not two, so you don't run into the same issues I did. All right, and then we didn't put any additional money in here. Like I've stated, if you've been following me, if I get those words out of my mouth, we've been investing all of our money into our Roth IRAs right now. So we're getting to a point where both of those are going to be filled. I am excited to come back in here in probably another week or two. I'm actually making a video this weekend about it. We're pulling the equity out of our house, and we're probably going to be dumping into this account somewhere between $50,000 to $60,000. So I'm pretty excited about that. If you want to see what we're buying or anything like that, come back over the next few weeks, and hopefully this account value goes up quite a bit from $21,000. And what I wanted to cover this week, just because I thought it'd be interesting, I've had a lot of positive stories that I've shared on here, is I actually wanted to look at what some of my worst holdings are and just explain kind of the rationale and why I continue to hold them. For those of you who have watched my videos, you know I'm a value investor. I'm not in this to turn a quick profit. I'm trying to buy companies that I think are stable and will make me significant gains over the long term. So I really don't do a whole lot of selling. Actually, when I just sold that VUG fund for the hot tub, that was one of the first major sales I've made since starting to invest. So if I go in here, my actual worst performing company, which this blows me away, has been Clorox. So if I look here, in total, they've been down 19.7%, so I've lost $60 in this account. As far as why I bought Clorox and why I continue to hold on to them, I really got into investing, at least with brokerage accounts like this, with like Robinhood, in the middle of this pandemic. And Clorox was one of the first companies that I bought. I actually was going to put a lot more money into Clorox. I guess looking back, it's a good thing that I didn't. But my thought was, in the pandemic, right, if I scroll down here, if you look at their earnings, right, now obviously they had a fall off here, but they continue to beat expectations, right? It was going up, up, up. I didn't understand how, in a pandemic where, household disinfectants were in such demand, that the share price could go down. It was obviously, I had to continue to learn. But some of the other things that I liked about this company when I bought them is that their stewardship was very, very high. Their dividend record has been extreme for paying out dividends, which has been really good. And they actually have a very high dividend yield year of 2.35. In regards to a company being down almost 20% and me continuing to hold my money in, I think that just goes to show, when I say that I'm a long-term value investor, it's because this is a company that I continue to believe in, and I do believe that share price will bounce back. One of the things that I learned when I bought in, because you can see here my average price in buying in at $233. If I scroll back down here again, it's going to state, because I do have Robinhood Gold, what the fair market value of this company is, and it's only at $163. So I actually bought this company at quite a premium, and if anything else, it's just coming back down to reality. But again, because this is one of the first companies that I bought, I didn't know what I was doing. I didn't have a lot of research under my belt, and therefore this company's lost some money. But again, it's not a company or a holding that I'm looking to try and get rid of. All right, so we'll go back to the portfolio. And a lot of these companies that I'm going to show you that aren't performing well are companies that I bought early on before I was doing a lot of research. I was just kind of picking holdings and trying to guess what would be good. Obviously, I was still picking companies that I knew something about. I wasn't taking flyers on small companies, but where is it here? LNT. So this company here, Alliant Energy, I bought them. They're actually a local company, Wisconsin based, which is where I'm from. And they are down 16%. At the time, again, before I was really doing a lot of research, when I looked at what their performance was over the last 5 years, when I bought in, it was something that was continuing to grow and had a lot of stable growth before obviously all this volatility. And I did see it starting to trend back up. I also liked when I bought them what their dividend yield was. So 3.24 to me is another dividend that's very solid. And at the time I was looking for a company in the utility sector. So I didn't have any utility companies at the time. It was local in Wisconsin. I was also looking here at fair market value, seeing that it's at 52 and looking at where the price is now. It is still a pretty decent rating. Earnings per share is kind of all over the board, and it's dropped off here quite a bit for Q4. But I do believe that in the long run, this company will come back. And again, I'm not looking to invest in any of these to make a quick buck. Unless the drop off was rather significant, I would probably hold on to all of these until I could at least get to long-term capital gains and not pay short-term on it. So then if I go back to the portfolio, another company, again, bought very early on was Merck. I'm trying to see where I've got that in this list. I think I might have gone down below it. Where are you, Merck? There we go. When I was trying to diversify my portfolio and I was looking at companies, Merck again was another company that's been around for a very long time with a very stable dividend. If I look here again, 3.34. And in the beginning, I was looking for companies because I was trying to build a dividend-based portfolio. So I wasn't so much into these high growth stocks that I didn't know much about. I know Merck's a very stable organization that's very large and been around for a long time. As you can see here, my total return with them is that I've lost 7%. So again, same thing. I'm not going to repeat it every single video, but long-term hold, I'm looking to hold on to them for a long term. And here, same thing too. It says fair values at $100 right now. I think it said the share price was like in the 70s. So I do believe that this too, over the long run, will continue to come back. I haven't bought a lot more into Merck, but it is one of the holdings that has underperformed for me. And then I'm going to check out one more in this list. I know this company I don't have a lot invested in, but was another company that I kind of bought early on. And that is McDonald's. As I stated, right, trying to buy into stable companies that at least I had some knowledge of early on. If I look here, same thing, lost 6.36%. So again, that only comes out to like $12, but it's still one of the companies that I've lost percentage-wise high on. And very similar thing, I saw a high dividend yield. I think throughout the pandemic, they were actually up a fair amount, where things were dropping, and then started to come back as far as earnings per share goes. And honestly, if I go up here too and not look at their 1 day, but if I look at their last year or even 5 years, right, they've had some very stable growth. So, I thought it would be a decent holding. I think that share price too will come back over time, but that's kind of a breakdown of what some of my worst performing companies have been. Now, to get out of the doom and gloom, right? Because some people will say, hey, if those companies aren't performing well, why are you still holding on to them? You're losing money. And I think part of that comes with the diversification, right? You're going to hit on some, you're going to lose on some, but as you've got a lot of different holdings, it should balance out to wins over time. Obviously, today was not a good day, right? Lost $520 in the market, and even more after hours. If we look at the last week, it has not been pretty. We're down about $1,100. But again, as you hear me say in every video, do not panic, right? If you're truly investing for the long term, if I click on the last month, it's still down a little bit. But as I continue to go out there, right, 3 month is up $2,800. Lifetime is still up $3,800. And some of these too, I have learned in doing these portfolio reviews, these numbers are prorated a little bit based on my total value that's in here, right? So if all of a sudden I pulled out a whole ton of money or add a bunch in, that can prorate what some of those percentages are over the long run. So yeah, that's my portfolio review for this week. We're still doing good. We're still making money. What we got to do now is look into buying that dip. Hopefully we get the Roth IRA filled up here in the next week or two and can start putting money back in. Thanks for watching.